The failure rate in junior mining, if you just take a dartboard and take 1,000 junior mining companies on the TSXV, maybe 2, 3, 4, or 5 will actually go all the way to be a mine. 99% of them are never going to be a mine. They're speculating, they're chasing returns, they're trying to hit a home run, but they're not attacking it with a systematic view of this is actually have a shot to go all the way. We're still very early in the mainstream adoption of precious metals to begin with. The last 10 years, the industry has been completely starved of capital. So there's been no money for exploration. There's been no money for the sector to grow and expand resources and build new mines. So if physical gold demand doubles overnight, we cannot produce more gold. It's going to take us 5 to 10 years of investment, of equity raising, of building, of engineering studies to bring new supply on. The producers are producing gold at $45 an ounce selling price, and it's costing about $2,000 an ounce to produce it. That's a really good business. Printing money has such a detrimental impact on the lower middle class. People who don't own assets and who live paycheck to paycheck are devastated by the policies that our government are adopting. You can't print gold and silver. If you had hard money again, the governments would not be able to adopt these policies.
Central banks are holding around 30% of their assets are in physical gold. Yet the average household of an ultra high net worth family is holding less than 1% in physical, right? We need to take control of our lives again, Andy, to be honest with you, of what does our money mean and how to use it well, how to preserve it, grow it, and deploy it.
When you zoom out and look at the macro environment right now, the debt, the dollar, the geopolitical shifts every day, maybe even this commodity super cycle conversation we talk about, to you, how does all of that translate into opportunity in junior mining? And why do you think this is the moment for that space?
This is Little by Little with Andy Schectman.
Well, welcome back, everyone, to a new episode of Little by Little. And today's conversation centers on one idea, and that's how disciplined capital allocation creates long-term impact during periods of change. But the reality of it is I was at a conference for Andy Millett in Atlanta and listened to Michael Gentile speak. I was blown away. Honestly, I was blown away. And I've been around the mining industry for a long time. Rick Rule is a very good friend of mine. I met every one of his conferences, and he's an amazing speaker. I Googled Michael who is this guy's fantastic. And he is known as the Warren Buffett of the junior mining sector. Surprised I hadn't been following, almost embarrassed that I haven't been following him sooner. It was one of the best, most enlightening presentations that I've seen in what is normally, and I hope he doesn't get mad at me for saying this, let's be honest, mining and geology isn't the most exciting topic, but this guy blew my socks off. And my wife, who is a big critic. Michael is known for identifying asymmetric opportunities, meaning low downside, high upside in junior mining. And he focuses on backing strong management teams and investing with a venture capital mindset. A genius, if you ask me, the way he presented. His partner, who I met also and actually got outside, I ran to the restroom right as in the middle of Michael's speech, and my phone kept ringing. I had to see who was calling me, and I chatted with his partner, Ryan, and sat out there with him for a while, blown away by what Ryan had to say. Ryan's going to join us today too, Ryan Petrillo. He brings a similar approach, but to philanthropy through the Apostles Fund and helping families align capital with mission and long-term impact. And together, these two are a powerhouse. And I think you could argue one focuses on investing and the other on philanthropy, but both are asking the same question. How do you deploy capital wisely to create lasting results? So let's dive in. Michael, how are you, my man? Thank you for joining. Ryan, good to see you. Appreciate you both for being here.
So great to be with you, Andy. Really honored to be on your show today.
Thank you.
Total joy.
Awesome. Michael, real quick, before I ask my first question, tell us a little bit about yourself, if you will.
Long story or short story, I discovered the stock market at 10 years old. So I was 10 years old. I was in grade 4 at elementary school, and the teacher did a project outside the classroom on the stock market. I thought it was the coolest thing in the world. So as a kid, I loved two things. I loved hockey and baseball and the stock market. Started following. I remember I was following like Labatt, it was a beer company, Molson. But my dad drank beer. Had an IBM computer. I was following IBM in the papers. Went to McDonald's, followed McDonald's in the stock market. The old days when newspapers used to exist, and followed them closely. So I always had the stock market bug my entire life. Always very thankfully, I knew what I wanted to do from a very young age and was very focused on that. I really feel kind of like you, Andy, got the same vibe from you. We met that I've never worked a day in my life. Just absolutely love what I do. If you paid me $1 a day to do it, I'd do it anyway. Just so passionate about what I do in the markets and creating value and researching companies and building businesses. So that's a bit of the short story. And I guess in my 20s, just had a profound encounter with God in my 20s, and that really shaped my thinking about how I've been blessed to be really good at what I do, been blessed to love what I do, and I try to do good with the wealth I create through my talents for investing and mining. So that's kind of how the cross section today's interview is going to be about both topics, I think.
Right on. That's very cool. It's a cool story because I've always believed, Michael, that in order to be really good at something, you have to love it. And when you love something, you don't mind the grind. You don't mind the work. You don't mind the research. I like reading. I never liked to read boring nonfiction stuff, and yet I read it 3 hours a day, every day, and I enjoy it. I've never had a Monday morning that I woke up bummed out that I got to go to work. Maybe after the Super Bowl when I might have had 1 or 2 extra beers that I shouldn't have. But in general, it's a blessing. You're right, to be able to love what you do. And it comes across in the way that you present yourself. So let's dig right in with that before we ask Ryan some questions. People understand the concept of mining shares, but there are various forms of mining shares. There's majors, there's juniors, there's exploration, there is royalty. I know your expertise is more so on the junior mining sector. So first of all, what separates, and again, you gave an analogy, and I'm going to ask you to do it again about your sister that made me laugh. And I'll say that because in presenting this question, I say, what separates the rare winning junior mining company from the many that fail to create value? And if you would enlighten the audience and tell them that little joke about your sister, which instantly captured my attention, that'd be great.
Sure. Let me take one step back and tell you how I got here. So I spent 25 years, ran out of school, 21 years old, spent 18 years as an institutional fund manager, ran about $1 billion professionally, one of the larger market neutral funds in Canada. I've always been a commodities guy since my teenage years, following the commodity sector. But for most of my professional career, Andy, up until like 8-9 years ago, I mainly invested in producing assets. So I invested in assets that were already producing gold, copper, silver, oil, whatever that may be. 2018, I had 3 beautiful girls. I was blessed with 2 other twin daughters. So I had 5 girls under 8 years old staring me in the eyes. And I was forced to make a big life decision, basically walk away from the career that I loved forever since I was 10 years old. To be at home with the family. If I was going to fail at one thing, I didn't want to fail at being a good father and a good husband to my wife. And so I stepped away from a career that I loved because I was in the commodity space, started buying gold stocks aggressively in 2015 when gold was $1,100 an ounce and everybody hated it. Pet rock, it was a relic, it was no longer relevant. I was buying those stocks professionally for my institutional class customers at the time, but producing assets. In 2018, I was really bullish on gold. And I thought gold was going to keep going higher. It was like $1,350 at the time. I was at home, walked away from my professional job and said, okay, I think gold's going up a lot. How can I make the maximum leverage to this gold price call? You can buy physical gold, which you do really well, Andy, and you go appreciate with the gold price. You can buy producers and appreciate with the gold price. But the micro cap, early stage exploration kind of resource stories, if you believe gold's going to go up a lot, in theory, that's where you have the maximum leverage. And if you're right about your gold call, that's how you can make maximum profits. Start looking in the sector. I had not done that professionally. My old clients would not want to touch a $30 million venture exchange microcap mining stock. That's not what they were looking for. But I said, if I'm going to do this, I'm going to do this with the same professional lens that I invested money for 18 years professionally, with a mindset of doing due diligence, doing things the right way. And so what I essentially did, Andy, is say, well, if I invested in producers for 18 years, what are the characteristics of producing mines that I can superimpose on an early stage exploration story? It doesn't have all the answers yet, hasn't been figured everything out yet, but what are the characteristics of winning mines that I can superimpose on a junior to increase the odds of my success? And the joke I used at the presentation we were both a part of was that my sister's a doctor. So the failure rate in junior mining, if you just take a dartboard and take 1,000 junior mining companies on the TSXV, maybe 2, 3, 4, or 5 will actually go all the way to be a mine. Like 99% of them are never going to be a mine. That to me is a failure if I'm trying to invest to find mines. So my sister's a doctor. If she kills 8 out of 10 of her patients, she'll be out of business really, really fast. In my line of work now, investing in early stage junior mining companies, if I get 2 out of 10 right, if I find 2 out of 10 of my stocks that actually go from a 30 million market cap to a producing asset, I'm going to be really, really happy with my returns and be, a rock star in terms of success in this business. So I'm not as smart as my sister. I picked a job where I can be wrong 8 times out of 10 and still be really good at what I do. But that's, tongue in cheek, sort of what I'm trying to do is raise the batting average by putting criteria around junior mining companies. Say if there's anything that can prevent you from becoming a mine, don't invest. You play tennis, don't hit the ball in the net, keep the ball in play so you don't make any unforced errors. It's the same thing in junior investing, but you have to be very rigorous and very disciplined because most people in this space think it's gambling or going to the casino. They're speculating, they're chasing returns, they're trying to hit a home run, but they're not attacking it with a systematic view of this actually have a shot to go all the way. And that's the approach I've taken to junior mining and been deploying that capital for the last kind of 8-9 years.
Yeah, so the Mendoza line, which is a 200 batting average in baseball, is actually Hall of Fame in the junior mining sector. So what does separate the rare junior miner company that does become a producer from the many that ever fail to create value or even come close to producing?
Yeah, I mean, there's a long list there. And I mentioned to people when I talk to them, like all my criteria that I've identified to invest in successful juniors are all based on mistakes I've made in the past. I am a big believer on it. You become a good investor by making mistakes. And losing money in the market is not a bad thing as long as you learn from that mistake and don't repeat it again. So for me, it's a combination, Andy, of geology. That's huge. You got to have the right rocks. You got to have the endowment, geophysical endowment necessary to have a mine. You got to have the right people behind the operation. So the right scientists and geophysics and geologists and business people as well. Right? We can dive into that. And then you got to have the right capital table and financing structure for the company because these companies obviously do not generate cash flow for many, many years. So you got to finance it properly. Happy to dive into details on all 3 of those things, but you need the rocks. So you need grade. Grade is your margin, right? So how profitable the mine will be once in production. Scale would be how much volume of rock or gold do you have? Do you have enough cash flow over long enough period of time to pay back the capital that you need? Infrastructure. Do you have roads? Do you have power? Do you have airports? Do you have towns? All that stuff is incredibly expensive to build if you don't have it. So I focus very much on that combination of what's the capital you got to put in to build the mine versus the cash flow you're going to get out. And those variables I talked about will have a major impact on that. On the softer side, you need the right management team. And I'm a big believer in management that have skin in the game. So if you're at a small company, you want to be involved in situations where management owns 10, 20, 30, 40%. When I get involved in a company, Andy, my minimum ownership stake is 5%. I'm trying to get to 20 or more. And so I'm up all night thinking about how to make these companies better. I'm not trying to protect shareholders from dilution, protect shareholders from bad actors that come into business and can hurt them over a long time. So direct ownership, skin in the game is also extremely important for shareholders and making sure that they have a good outcome as well.
Yeah, that makes a lot of sense to me. And what you just said, the last point, I mean, I think you're somewhat known for actively supporting management teams rather than investing passively, which is an interesting nuance. Yeah. Why is that approach so important to you?
So again, my institutional career for 18 years, when I was investing in bigger companies, typically they have pretty responsible boards, professional management. They need less oversight. So for the first 18 years of my career, Andy, I would call myself a passive investor because I ran a diversified portfolio of relatively liquid stock market companies. If I got frustrated with management or didn't like the strategy, I could just sell the shares and move on. When I first started investing in junior mining, I was assuming I was going to adopt that passive approach. So I cut a few pretty big checks for my first couple investments in the space. And I quickly realized if I stayed passive, I was likely to lose a lot of my money or all my money in these companies. And not because they were being poorly run on purpose, but oftentimes they were lacking that financial capital markets, business building nature of the business. Most junior mining companies, Andy, are run by geologists. They're really good at what they do, but they may or may not have the business acumen to build a successful business. And so one of the most disappointing outcomes for shareholders in junior mining is you actually find a mine or you find an asset that can be a producing gold asset or copper asset in the future, and shareholders don't make any money. And the reason why they don't make any money is because the management made poor business decisions along the way that diluted shareholders or raised money at the wrong times, that ran out of capital at the wrong times, which meant that shareholders would not have a good outcome. So I brought that, not being a geologist, not being a rocks guy, but being a business person that understands mining, bringing that focus on building a business that actually makes money for shareholders, not just a business that is a science project or a passion play to bring a mine into production. So that combination of, business and geology is what differentiates it. And you can't have that if you're passive. And a lot of these companies, as I mentioned in my talk that you heard, have 2 or 3 full-time employees, so they're understaffed. They may be heavy in one level of expertise, but lacking others. And so I also try to bring new board members, new talent, like you would in any small business, bring in the right people around the table to allow the business to thrive. And a lot of times the companies don't have the human bandwidth or the financial bandwidth to make that happen.
Interesting. So you're actually making recommendations to the staff, to the management, about building out infrastructure in terms of talent, in terms of staff. Is that uncommon?
I consider myself a partner in these. Like, I'm doing a deal this week. Andy's may close this week. We'll see if the timing hits or not. But I had to call the manager last. I said, look, I'm coming in as a 20% shareholder. I consider myself a partner. Like, I'm not officially part of management, a cornerstone shareholder, but I want to be part of this discussion around financing, about M&A, about strategic initiatives, capital allocation, deployment. What are we doing on those key themes? And I want to bring sweat equity to the table as well. I'm not just there to cut a check and check the stock price every day. I'm there to help build a business. I consider myself a mining entrepreneur more than I am an investor in the space, because my time horizon is so long that I'm really there to build the business brick by brick with these individuals. And most of the time I'm very welcome at the table, because it's a skill set that they're lacking, or they could definitely have some help with.
Yeah, that's interesting. And again, is that an uncommon thing in the industry where, someone who is investing to the degree that you are actually gets a seat at the table and they actually listen to you? Would you consider that to be rarefied air?
Yeah, I think it's rare for a few reasons. One, most people are not willing to hold on for 5 to 10 years like I am. That people are very short term in life in general these days, in all things. Second of all, most people are not willing to invest percentage ownerships that I have. So in Canada, if you own more than 10%, you're considered an insider. So when I own more than 10% of a company, if I sell one share of a company that I own, I got to file that. And so, I'm literally locked up. So it can literally become a private equity type investment. So most people don't want to get locked up and committed. And thirdly, most people don't want to deploy the time. So this is a time consuming, sweat equity, roll up your sleeves type perspective. And that takes a lot of time. And so they're not willing to dedicate the resource. So I'd say it's very rare. You have a few people like, Eric Sprott, Rick Rule gets quite involved in the company's involvement, but it's pretty rare. And the pool of capital for junior mining and even precious metals, as we know, Andy, is still pretty small, right? So there's not that many people that are focused in this arena right now. So yeah, it's rarefied air, a rare attribute, which is why I like to be fishing in ponds full of fish where there's no other fishermen, right? It gives you a lot of opportunity to create a lot of value and find some amazing opportunities. If there was 80 guys like me in the space, I think I'd be less valuable, quite honestly, because there's more capital and more expertise available. But there isn't right now. And so that's the white space I'm trying to fill with the passion I have for the business.
And maybe that's why you're known as the Warren Buffett of the junior mining share sector. I mean, honestly, and I'm not saying this because you're on my show right now, Michael, I listen to you and it makes me want to invest with you. You ooze integrity and you ooze intellect and logic. And the part about spending the money, doing the research, being able to hang on and wait because you believe you're right. These are all very difficult things to do in life, period. I'm very intrigued. Let's shift to a bigger picture. When you zoom out and look at the macro environment right now, the debt, the dollar, the geopolitical shifts every day, maybe even this commodity super cycle conversation we talk about, to you, how does all of that translate into opportunity in junior mining? And why do you think this is the moment for that space?
Great question. And I mean, Andy, I just want to throw some flowers back at you. I was so impressed. We shared a keynote presentation in Atlanta together, and I speak quite a bit publicly, and I rarely have any stage fright when I go up. But you were so passionate and so knowledgeable as the lead speaker at that conference. You ooze passion for the business and knowledge, and those are very rare attributes when you can back up your conviction with incredible research and definitive proof on the things you're working on. So I think you do a tremendous job on defining the macro, and your viewers would know how bullish you are in gold. And I echo those sentiments. Since 2015, I've been very bullish on gold and silver. And I would say, if anything, my macro thesis is wildly more bullish than I thought about 10 years ago. A lot of the trends that I believe was happening, the escalating debt, the deficits, the monetization of everything is happening. It's happening faster and quicker than I thought. What surprised me, Andy, is that in 2018, when I made went all in on precious metals equities, was the gold price continued to do well, but the mining stocks were stuck in the mud. And what I realized a few years into that process was all the buying was coming from central banks for many years, and they were driving the gold price up. But the interest of the average public in precious metals, and you probably picked that up too, was still very, very low. And so I think we're still really early in the mainstream adoption, and you do a tremendous job of hopefully changing that and educating people on the need to preserve their wealth through precious metals. But I think we're still very, very early in the mainstream adoption of precious metals to begin with. And so as a parallel, equities are a step down the risk curve, even more risky in terms of equities versus precious metals. So we're still very early in adoption and interest level in the space. And the last 10 years, the industry has been completely starved of capital. So there's been no money for exploration. There's been no money for the sector to grow and expand resources and build new mines. So not only are you talking about the physical demand quite a bit, Andy, you're seeing on the COMEX and the physical demand, but the supply side has been starved of capital. And you cannot wake up tomorrow and build a mine. So if you all of a sudden physical gold demand doubles overnight, we cannot produce more gold. It's going to take us 5 to 10 years of investment, of equity raising, of building, of engineering studies to bring new supply on. So the opportunity here is you're seeing the physical demand in your business. You articulated so well in terms of what's driving it and how it's likely to continue. The supply side is not able to keep up. And that's where I'm focused on, is trying to bring on new gold supply to the market. And the valuations of these companies, Andy, are so depressed. They have not responded to $4,000, $5,000 gold at all. And so you can still buy resource companies today, the ones I'm invested in, anywhere between $30 and $100 US in the ground of a resource. Wow. The physical gold price is $4,500 an ounce. You can buy reserves and resources in the ground today for $30 to $100 an ounce. Now, obviously, it's going to take a couple $1,000s an ounce to produce those assets with the cash flow, the capital required to bring it out. But you could literally buy an ounce all in today, resource in the ground plus capital with some time value for $2,000 an ounce US. Or you can buy an ounce from yourself and Miles Franklin for $4,500 US per ounce. So that's the arbitrage I'm working on. There's the margins in the industry today are $2,500 an ounce profit margins. The producers are producing gold at $45 an ounce selling price, and it's costing about $2,000 an ounce to produce it. That's a really good business.
Yeah.
And that cash flow needs to be reinvested in new producing mines to make sure 20 years from now they have physical gold to sell you and your customers in the future. So that's the market I'm playing in. It's arbitrage on, I can buy really cheap, yet to be produced ounces under your feet in really good jurisdictions like Canada and the US. Have the patience to wait 5 to 10 years, pay $50 an ounce today in the ground, and then have a major mining company buy me for $600 or $700 an ounce 5, 10 years from now, because they can produce it at $2,000 an ounce and make a bunch of money in the physical market. So that's the food chain I'm playing in. And the big opportunity is, as precious metals go more and more mainstream, as the price of metal continues to go up, as the audience continues to broaden, more capital flows into the equity markets, those valuations will go up organically from $50 an ounce to $200, $300, $400, $500 an ounce over time, as the market tries to close the gap between what's it trading at today and what's it worth in a normally functioning market. And that's the sandbox I'm playing in. And I continue to write big checks. I still see tons of opportunity in the space.
Yeah, I'm going to come back to you at the end. I think I want to play in that sandbox too. And I hope my clients listen to this very, very strongly. I mean, like I said, it takes a lot to push me in a direction after doing this for 36 years to someone unique. And I don't know that I've ever seen anyone dedicated specifically to this section that articulates it so well, but does it in such a regimented, very, very serious and well thought out and planned fashion. So I'm going to come back to you and thank you for all of that, Michael. Let's turn to Ryan for a second now, because Ryan, while the asset class looks different, the underlying discipline around capital is remarkably similar. What trends are you seeing among the ultra high net worth families? And I suppose before I even get there, Ryan, because I know what you do, why don't you explain the relationship between you and Michael and what you're doing working with high net worth families, and just a little bit about yourself.
Sure. Yeah, it's a joy to be on your show, and throwing flowers at both of you guys. It's just such a joy to see both the macros and micros come together in such a great way. I think that, you know, as you and I have talked about, Andy, I've had the privilege of meeting a number of great families. And, you know, one of the things that I've noticed is when you sit with them and ask, hey, what do you want to be known for? You hear a lot of, well, you don't hear a lot of like, hey, this is the assets I've been able to accumulate and where I want to be able to preserve my wealth and grow my wealth. You hear a lot of, I want to make an impact on society. I want my kids to remember me for the building I just made across the street that's serving underprivileged children, or the well that I built in Africa, things like that. And so I think a lot of the one-to-one ways that we, Michael and I have come together is, hey, if philanthropy really means so much to us and is a lot of motivation for our why for both accumulating and preserving and growing wealth, maybe we should do the same level of rigor and due diligence and de-risking as I would to have return on my capital, to have what in our field a return on soul of the impact that we're having. And so a lot of the framework that Michael has worked on with how he, studies a couple thousand different junior minors, and thematically that's the direction we're going to go in. And I'm going to de-risk that so that, if I'm only going to apply into 40, I know that 4 of them are going to be 20 baggers or 50 baggers. We want to have that same level of rigor with how we're doing that from a philanthropic lens, specifically for us in the Catholic Church in the work of evangelization.
Interesting. And I think you two make a great team. With that being said, what trends are you seeing among these ultra high net worth families today? And in your mind, maybe it has something to do with being very traditional in their approach to investing. Where are most people in this space underprepared?
Yeah, I think that there is, and I'm so glad that we're on this show, because I don't think that everyone has a full understanding of the global macroeconomic headwinds that are coming. And so to really think more seriously on what are some of the themes and trajectories that we're having, and what your money means, how to preserve it. We talked about a lot, the return of your capital is important, but also the return of your capital with such the physical custody and in the mining space as well. I'm seeing a lot of families that are concerned, and there's rocky ground, but not a growing awareness of how to respond to such events that are coming. And I think too, at the end of the day, people are wanting to, especially people that have been endowed with great resource, they want to have an impact with what they've been given. It's just, where does that belong in my portfolio of philanthropy? And so, Michael and I have talked about a lot, there's really kind of 2 tranches of what we're seeing of where money is living in from a philanthropic lens. You have your proximity philanthropy, and then you have what we're doing is a de-risked philanthropy model. So your proximity philanthropy, you might know a great charity or a great college that you enjoy, the art center, a mission overseas, or whatever it might be. But not every charity is endowed with the same operational rigor of a world-class execution that you and I are both used to. And so rather than, and I love how you titled your show Little by Little at All at Once, we want to do a similar kind of lens of, we are going to deploy capital little by little and then give a big gift, because you'll see in a lot of high net worth families have communicated just a lot of the pain points of, hey, I want to do something meaningful. I want to leave a legacy, and I'm going to give 10 million plus to this local thing. And that's great. And then, but at the same time, they might not have all of the things needed, like Michael mentioned in the junior mining space, to be able to execute. They might have leadership challenges. They might have software gaps. They might have whether that's HR issues, or they have they don't have the fundraising capacities for longevity. And so what we want to do is come alongside, just as Michael would in the junior mining space, have more of a leadership voice in the room, which is rare for us in the nonprofit space as well, to come alongside and journey from at least 1 to 3 years to make sure that you're ready to be able to receive $1 million+ gifts. So we're going to come alongside, make sure you're optimized, give those little by little tranches, and then once you're ready, then deploy that. And what we've seen from the ultra high net worth, like, to be able to have a mechanism in place that's turnkey, that can de-risk your philanthropy and really stretch your dollars so that you can fully achieve that goal. And so we've adapted, and Michael's been super generous to open source to us a lot of his framework to be able to create a formula that we can replicate. And we put it on our website, theapostlesfund.org/research. So you can see a little bit of how Michael is working that into what we're doing at the Apostles Fund to de-risk our philanthropy.
Right on. No, it's amazing. It's amazingly generous on Michael's behalf and of yours. I mean, time is a currency too, and effort is a currency. I know that to be true. It goes both ways, and I think Michael explained that very well at the onset. To be with his daughters, that's priceless, right? And to work from home and to do things the way that he has while still focusing on philanthropy. So tell us about the Apostles Fund and why you see this major opportunity to invest strategically in evangelization and cultural renewal. What's it all about?
Sure, that's a great question, Andy. And I'll speak to it honestly. And I know that everyone's got their way of belief and their charities of choice, and I certainly don't want to disparage that. But from our lens, we also think kind of just as Michael would share, like, hey, thematically, governments are going to try and print their way out of problems. Therefore, gold and silver will be a more valuable asset. Why not capture alpha on that in the junior mining space? What we believe through the Apostles Fund is that we believe that thematically, if you want to help address some of the physical poverty, the challenges that you're seeing in society, whether that's why is there crime and genocide overseas? Why is there theft being happened? Why are we printing money? Which is a hidden tax, right? We believe that in order to fix a lot of the physical poverty, it's really a spiritual poverty that we can address. And what we believe, faith in Christ and through the gospel work lived within the Catholic Church can address that. And so, looking at that, and we've adopted a similar curve, just as Ray Dalio has his rise and fall, the big debt cycle that a lot of currencies go through and nations go through. Similarly, we believe that just as you need inventiveness and technology in your economy to grow your way out of these problems, everyone's hoping that AI is going to be that. We'll see. We believe that we need a productivity engine to help address a lot of these macro challenges that the world is facing. And we believe that direct evangelization is that productivity to be able to stretch our way to address these larger issues. So a shorter way to say that is, when a soul encounters Christ, it's going to change a lot of things, right? There's going to be less crime in the world. There's going to be a lot of less challenges on the home front. People are going to be better stewards of their money. They're going to think diligently of what they have and what it all means. And so there's a lot of things that we could have done and deployed capital in. That you have education, which is wonderful. You have direct service. You could go build a well in Uganda. You could do a lot of things. And we really believe that, okay, out of all the bundles of goods, like, why would I fund just a single name Mother Teresa of today, where I could fund the engine that's going to produce 100 of Mother Teresas, that's going to renew a lot of the poverty that is expressed in Kolkata, India, and beyond. So, as an example, we are addressing all of these charities throughout the globe. We're in a global fund. And we're identifying, we have an IEES model. So identify, evaluate, equip, and then scale, which is our deployment of capital. We have selected in this first act 4 specific charities that we have identified that are thematically more ready to be able to have meaningful impact. I'll give you an example. So I have one philanthropist that gave $300,000 to a local parish community that was doing youth ministry. And he really wanted, like, hey, we have 10 kids in this program. Let's boom this so we can get a couple hundred. There's so many people in our area. So we gave $300,000, and eventually it only ended up having 30 kids in the program over a 4-year period. And one of the things that we really wanted to look for is like, okay, so how do we create a little bit better of a return on soul? So instead of like 10 grand a kid, there's one group that comes to mind, Corazon Puro, run by a great Franciscan priest, Father Agustino Torres. That man is in 7 countries, impacting over 25,000 kids, and has running on a $500,000 budget. And he's hungry, he's humble, he's smart. He came through and applied for us. And when we got to know him, that guy moves with speed and with diligence, and his team exhibits the exact same thing. So we really look at leadership, just as Michael does in the junior mining space, to make sure, there's the phrase, the fish rots from the head down. We make sure that our leadership is really, really willing to run. We've noticed that, okay, when we come in, we're going to evaluate, we're going to get them the right operations, we're going to give them the fundraising practice. Within 20 days, that guy was able to raise more than 70% of his goal, which I can tell you, working in nonprofits, that's very, very rare. And he's already mobilized 30 new missionaries within the next 20 days. He's working on acquiring a facility that is a couple hundred acres. We'll see where that goes. But That's some of the value of when you really do, like what Michael has said, get to know the charities that you're really wanting to meaningfully make an impact with. And why just fund a 10,000 person a kid where you can have $100 a kid reaching 7 countries? Does that make sense?
Oh yeah, and just like I think Michael and I spoke to being enthusiastic, loving what we do, the enthusiasm of what you are doing just flies out of you. You exude that authenticity. I'm going to ask both of you the same question. Last question before you tell us how we can get involved, how our listeners should and can get involved with what you're doing. I'm going to dig deeper into the services you offer. It's very compelling, and it's less compelling perhaps in an hour that we will have talked versus the time that we spoke together in Atlanta that had piqued my interest and my own level of digging already to say to people candidly that this is something I plan on digging into. But I'm going to ask you both the same question. We'll start with Michael. There's a long history and tradition in Catholicism and Christianity of viewing gold and silver as real honest money. I think cumulatively they both were mentioned somewhere in the neighborhood of 700 times in the Bible. And you could very well argue this is rooted in natural law. Michael, how do you see an alignment between that tradition and the way maybe faithful families and institutions should be thinking about wealth preservation today? And then I'll ask the same question of Ryan.
Fascinating question. So I would say, in my belief, we're called to be good stewards of what God gives us. I believe everything I have comes from God. So my ability to make money in the markets, my intellect, so I want to offer it all to him. So God's creation, governments, money, everything, that's all in God's hands. We have to be good stewards of it. I think money printing, Andy, you say this so well. Like we know this because we can't say it enough. Like printing money has such a detrimental impact on the lower middle class. People who don't own assets and who live paycheck to paycheck are devastated by the policies that our government are adopting. They say they're helping the lower middle class by overspending and printing money and running massive deficits. They're actually doing the exact opposite. They're killing these poor people who are struggling to get by. So as a steward of God's creation, someone who cares for my fellow men and women and human beings in the world, it's important that the hard money, you said biblical, like it's mentioned 700 times in the Bible, you can't print gold and silver. If you had hard money again, the governments would not be able to adopt these policies that they say are helping the lower middle class and are devastating their ability to survive financially. So there's wisdom in fit hard money that goes beyond just an investment strategy or, for Ryan's high net worth families about how to preserve your wealth, your purchasing power. There's wisdom in the fact that, the resources we have, we're supposed to be good stewards of them. And I just find that the economic policies we're adopting globally are so detrimental to that there's God's wisdom in spending what you make. Charles Dickens says, if you make £5 and you spend 5.5 misery, if you make £5 and you spend 4.5, you'll live a happy life. Well, if the government's adopted that, we wouldn't have the problems that we have right now. So hard money does not allow you to adopt some of these practices. I mentioned in my presentation as well. Like the interest on the US debt, $40 trillion times 5% on the 30-year bond right now, that's like 40% of the total revenue of the US government. If you and I had 40% of our family budget as interest expense on our credit card, you and I wouldn't survive very long financially. How do we allow our governments to do this ad nauseum in perpetuity and not expect it to have a cascading impact on the vast majority of the population doesn't benefit from asset price inflation? So there is real wisdom in that, and you're an incredible voice, Andy, in the space. And I wish we had more people in government that understood the consequence. Maybe they do understand their actions because they're serving the very few that benefit from this. But the general populace has to understand the impact of these decisions that governments are making and that money printing is having. And hard money is an eye-opening gateway experience to allow us to understand, whoa, maybe we need a different course here. Maybe I should vote differently. Maybe I should become more engaged at the local political level. I'm not a political guy. I don't like getting involved in politics, but I think it's very important to educate people so they're making good decisions with their own money and good decisions with their voting, to vote people out who are not making good decisions with their future grandkids' money.
Yeah, I mean, I hope people can see why you're such an amazing person, both of you. But giving and being philanthropic is as honorable as can be, and for the right reasons. You speak to the wealthy getting wealthier and the poor getting poorer. That's known as the Cantillon effect, in essence, where the people closest to the money have the ability to access it first and buy assets that appreciate in an inflated environment. And as it settles down into the mainstream in the form of higher food, higher tuition, higher energy, higher housing, higher everything, the folks that are just trying to put bread on the table and get to and from work are having a hard time. They're the ones affected most. That's an amazing answer to a question that's not easy. And so I'm going to throw this one back at you, Ryan. I'll read it to you again, and that is, how would you answer the exact same question in the respect that, what is the alignment between the tradition that we are speaking about, with gold being honest money, something rooted in natural law, and mentioned 700 times in the Bible?
Yes.
What, in your mind, is that alignment between the tradition and the way faithful families and institutions should be thinking about wealth preservation today? I mean, because really, you could argue gold and silver are God's money.
Yes.
There is that. I mean, I'll tell you, in the 36 years I've been doing this, there's a huge swath of members of the church that we've worked with and understand it. What way should these families be thinking about it? And maybe I'm going to put a little nuance to it. Why have they not?
I think that's a great question, Andy. And honestly, in the Catholic Church is always taught that to think like an owner of your life, over every domain. And so we live in a situation right now, I think more from a macro lens, where there's an incentive structure to do more passive using of your money and to not really think about it. I mean, a lot of high net worth families that I talk to have their Goldman advisor or their rep at whatever. And the incentive structure is to keep them invested. Don't worry about that. Don't worry about that. When Obama took office, we were at $8 trillion in debt in the US. Now we're at $39 trillion. They don't worry about that. And so when you talk about like what's the overlay of like gold and silver and how does this all kind of stitch together, I think that humanity's had a history of when there's a truth out there, humanity's temptation is to crucify the truth, right? And to keep it buried. And so to think seriously, Michael, you and I, we were all talking, and to think more analytically with what you've been given. Okay, we have a situation where central banks are holding around 30% of their assets are in physical gold. Yet the average household of an ultra high net worth family is holding less than 1% in physical, right? That's something I think we should, not financial advice, but we should consider, looking thematically and not just accepting what we're being told, but really being challenging to think like an owner. And if this resource that I've been endowed with is intended to both, help me, help my family, help my community, then I need to think seriously of the gold thesis, and does it make sense for us? And if not, why not? And I think that as we kind of move into a season of speculation, you might say, of what the markets mean, what is the bond market really telling you right now? I think that there is an important element that don't just accept everything you're being told by those that you might trust and know, like really, whether even with church teaching, wrestle with it. There's an image in scripture that talks about, this guy, Jacob, this was in the Hebrew Bible, right? Wrestling with to fight for the grace, for the angel. I think you need to take every thought captive and really understand, okay, do I really just thematically just endow myself with, abdicate my thinking to my financial planner? Or why is it that Morgan Stanley is saying that, have the instead of the 60-40, have 20% in gold, and yet the people at Morgan Stanley might be telling you, that's rubbish. So to really think these things through, I think is a deeply human element that we need to take control of our lives again, Andy, to be honest with you, of what does our money mean and how to use it well, how to preserve it, grow it, and deploy it.
I love that, and it's very true. I work with Morgan Stanley, and one of the guys that I have an account with is a dear friend of mine, and he's one of the biggest money managers in Florida, Forbes top 40 list. and he wouldn't know a gold coin if it fell on his foot. And I give him a hard time all the time. I say to him all the time, Russell, you do know that your chief investment officer said sell half your bonds and put 20% of, or half of that, which equals to 20% in gold, right? You do know that. Oh, yeah. You know, it hasn't filtered down even to the Forbes top 40 list, but the CIO, the chief investment officer, is speaking to the people at the institutional level. Well, they get it, and they're the ones that are buying it. And I love how you frame that as well about taking accountability. And if people worked as hard as you and Michael do and I do in to be good at what we do, to prepare and be the steward of their own wealth, perhaps they would retain that wealth and grow it much more. And look, we've covered a lot of ground today, and you know, from the commodity super cycles to cultural renewals, junior mining, mission-driven philanthropy, etc., to where and how you deploy capital and how that matters. And I want to thank you both very much. You guys are amazing. I want to have you both back on again. But I want to ask one last thing that's very important to me, and that is, how can people get involved with what you're doing? I'm going to start with you, Michael. If someone wants to get your information and to have you assist with them in building an account, what does that look like? And we'll post all of this in the show notes. But what is the easiest way for someone to open an account with you, to work with you, to follow what you're doing at the same time?
Sure. So I guess, unfortunately, I don't take any outside money. So the money I invest in junior mining that you see my name attached to, Andy, is all my own personal capital. I don't have a fund. I don't take any customers. I ran money for a large part of 18 years, and I know what that entails. And for now, you know, I was very flattered by the comparison to Warren Buffett. I don't think I'm, you know, worthy to tie his shoelaces, but I'm working on it. But one thing that made Warren Buffett really successful is he never had outside money. People don't understand this about Warren Buffett. Warren Buffett had a closed-end fund. So he listed Berkshire Hathaway. So people buy and sell his stock, but his investment capital is captive. He never gets inflows or outflows. One reason why money managers underperform is that most retail investors, and God bless them, they sell at the lows and they want to buy at the highs. So they're pulling money out of your fund at the point of maximum opportunity when you should be buying with both fists, and they're pouring money into your fund when the market's at the highs and you should not be deploying capital. You probably should be selling shares instead of buying them. So I wanted to avoid that pressure. I also know the pressure that comes with running other people's money. I loved it for many years, but I'd rather run my own capital. If I have a bad month and I'm down 5-10%, the only person that knows is my wife. And she doesn't know that either, right? So I don't have the performance anxiety of a fund manager. So it's all my own capital. That being said, I get so many questions like you just gave me. How do I follow you? I started a newsletter in October. It's a free newsletter. If you go to SaturdayMorningMining.com, it's a website, SaturdayMorningMining.com. It's not investment advice. It's not telling you what to buy, what to sell, but I'll share my macro points of view. I wrote a long missive last week on debt, interest rates, spending, the US government, and why the macro thesis was unstoppable in my view. And I'll also talk about interviews I did like this. I'll post that on my newsletter and the YouTube interviews I do that week. And then importantly, I talk about the 35 to 40 positions I have in my portfolio. If there's any news that week on names in my portfolio, I'll write a summary of the news translating from geology into plain English of what's actually going on. So that's a way for viewers to know what I'm invested in and what I'm following, what I'm interested in. So that comes out for free every Saturday morning at 7 a.m. Absolutely free. SaturdayMorningMining.com is the best place to follow me. And it's a one-stop shop for everything I'm talking about in markets.
I mean, dude, that's incredible. That's philanthropic in and of itself. Doing what you can for your fellow man. I would assume it's probably much harder because of those restraints, because of the inflows, because of the tug from the investors to manage other people's money. Maybe you can be much more true to your beliefs and to your heart and to your strategy when you're managing your own money. It's an interesting thought, which I never really thought much of. And thank you for enlightening me about the Berkshire Hathaway. It makes sense. I mean, if it's your money, you do what the heck you want, and maybe you're able to do things that otherwise you couldn't. Very, very cool. I'm gonna have to dig deeper into that one with you next time. And how about you, Ryan? What's the best way for people who want to be philanthropic with you? What's the best way for them to find out more about what you're doing and maybe to take part in it, such a good cause?
Sure. Yeah, we have our website, theapostlesfund.org. What Michael and I did is we open sourced a lot of our framework. We recognize like, hey, a lot of what we talked about was more applicable to a Christian Catholic effort, but a lot of the principles and frameworks we think are universally applicable. Either if it's a family office or just their own investor wanting to meaningfully accelerate their product, they can go to theapostlesfund.org/research, and you can download directly. Michael wrote his white paper on why he created the Apostles Fund. And then sideways to that, the venture capital philanthropic method that we've built that you can download. You can also email me directly at rpetrillo, Petrillo, at theapostlesfund.org. If you have questions, we're happy to help you. And, happy hands make light work. So, if there's ever an initiative that's not really totally relevant to us, but we can be helpful, you're happy to reach out and we can answer your questions. And sideways to that, Andy, I do have to thank you for what you're doing. As you and I had shared, it's meaningful to both Michael and I that there's a voice crying out saying, hey, to be on the right side of change here, to think seriously these macros and micros that might be existing, and to make meaningful impact with what you've been given. So you're a gentleman among scholars, brother. And so really, really happy to be on here.
Dude, I appreciate that more than you know. Look, it's very rare in the cynical world we live in to see two guys like you who focus on charity, who focus on giving, who focus on hard work, who do the right thing. And I think that's a rare thing these days. It is truly an honor to have gotten to know you, albeit briefly. I would love, and I don't say this to everyone, and if I do, it may just be being pleasant, but I'm dead serious. I would love to have you both back on again and dig deeper into, on Michael, on your side, on what's happening in the mining share space and what's happening with your philanthropic endeavors, and also you, Ryan, as to, maybe a trend you're seeing or an awakening that you're seeing amongst the wealthy families and the way that they are accepting and understanding maybe this monetary change, and anything that I can do to help foster that the way that you guys are doing. You're incentivizing me to, make me feel like I got to try even harder to do the right thing, because it's if there were more people, I guess what I'm trying to say, like the both of you, the world would certainly be a far, far better place. And I think anyone watching this show would understand that you can't fake your sincerity. Guys, amazing. I look forward to picking up where we left off. I want to thank you for dropping in very, very much. And I look forward to picking up where we left off real soon. But bottom of my heart, all the best to you. Keep doing what you're doing, and we'll check back in real soon.
Thanks, Andy.
Appreciate your time, Andy. Thank you,
everybody. Yeah, you bet. Thank you.
This is Little by Little with Andy Schectman.